I'm Ryan Polakaitis with REI Unite, and I'm here with Mike Ruscia of NoteConference.com. Mike specializes in buying notes nationwide. Thanks for being on the show, Mike.
Hey, my pleasure. How you doing?
Doing very well
Great.
on this cloudy day.
Yeah.
So why don't we just jump right in here? Mike, why don't you tell us the biggest difference between investing with notes and then your typical traditional, we'll say, real estate investing where one
Sure.
purchases an investment property?
Yeah, well, I kind of believe in both. I like the fact of owning rentals, a long-term appreciation type of mode, paying down those mortgages and getting to a positive cash flow. But the cash flow that comes in from performing mortgages is just a beautiful thing. And I get monthly checks for the next 20, 25 years that I just don't have to worry about. I am becoming the bank. And when you get to be the bank, they get to get the money. So you might as well try to be the bank yourself. That's the biggest thing that I enjoy.
Right.
Being a bank.
Exactly. So let's just elaborate a little bit on that because some of the listeners that are coming on this for the first time, maybe brand new to real estate investing as a whole, they're familiar with buying a house, maybe fixing it up and selling it. We're talking about notes, and you're mentioning being the bank. Why don't you elaborate a little bit? So instead of buying a house where you would buy it, fix it up, sell it, you own the house, we're talking about notes, buying the notes, in which case you don't own the house, similar to when a bank gives you a mortgage for your own house. So why don't you just kind of tell a little bit about the differences when you're investing with notes versus investing in real estate
Sure.
property?
Yeah, it really is a different mindset. So we buy a mortgage. It's a non-performing mortgage. It's a document that the bank sells to us, and now we assume their position of mortgage holder. And we'll buy, let's just use an example, a $100,000 mortgage on a house that's worth $100,000. We can buy that mortgage for about 35, 40,000 bucks, something like that. And now the borrower owes us not the 35 or 40 that we paid for it. They owe us the $100,000. That's how we make our money. $100,000 mortgage, $40,000 purchase price. The borrower still owes us that 100,000 bucks. And now it's our job to go and get this borrower to start making payments to us, something that we can enjoy and realize that, hey, we're going to get $600 a month out of this mortgage for the next 25 years, whatever it works out to with an amortization that makes sense for us. $600 a month, we'll get our money back in, 4 or 5 years, and we're really happy about that. We get a borrower to start making payments to us, then it's our job to go and find another mortgage. And when that money stacks up, when those payments come in, go find another one to purchase, and another one, and another one, until we've got the cash flow that we need to not have to get out of bed. And
Passive income.
That's the difference. That's the difference between a rental, which I consider it's more of an active investment. You were just telling me some fun stuff that you're going through with your rentals. With the note business, once you get a mortgage performing, for the most part, if you did the workout correctly and it's something that the borrower really can afford, those payments just do come in until the mortgage gets paid off. And that is just a beautiful business plan. I found out about this about 9 years ago, and I couldn't believe that the bank would leave so much on the table when you look at a mortgage that you can purchase for cents on a dollar. So in that $100,000 mortgage, we're buying that mortgage at 40 cents on a dollar. That's the term, cents on a dollar. I never could imagine that a bank would leave that much on the table for us, and so that's essentially the difference. I believe, like I said, in owning both real estates and mortgages, and when we're out buying these things, we're buying them nationwide. We don't have to. A bank shows us a list of assets that they want to sell. These assets have been decided on by the bank that these have to go, and the bank doesn't want these anymore. Let's sell these things out to an investor like myself, and they take that cleans up their books entirely. When their books get cleaned up, they don't have this non-performing debt on their records. It actually frees up the bank to go out and do other better things. And a lot of banks still have non-performing assets on their books.
Right. So there's many parts that I know some of our beginners are going to have questions on. So first and foremost, just to elaborate a little bit more on that, when you're investing in notes, you're buying the note itself. Just as if you own your own house, you got a loan from, let's say, the bank, you get a note in mortgage. The note is a promise to pay. The mortgage ties that note to the property as collateral. So in the event that you stop paying the bank, they have the right to foreclose and take possession of your property. When you're investing in notes, you're becoming, in essence, the bank. You don't own the property. You own the note. You own the right to receive those payments. So that's one of the biggest differences, is that you're not going to have those landlording issues where you're responsible for the maintenance, but you will have responsibilities of trying to get that note performing. Now, before you mention non-performing, again, for some of our new listeners, they're going to want to know, wait, what do you mean non-performing? Why don't you go into the different types of notes that there are? Because
Okay.
obviously the different types of notes is different types of strategies of how you're going to invest. So
Yeah,
you mentioned
and different kind
non-performing.
of pricing as well.
Correct.
That really affects. So let's dig in here. If you have to assume that the bank is sitting on, let's say, 5% of the mortgages that they hold are in a state of non-performance. That means that they are in a bucket that's called the non-accrual bucket. That means that they're not accruing any interest, they're not accruing any profit. These things are sitting off on the sidelines, and they're not doing the bank any good in that status. The bank has the ability, I guess you could say, to internally write these mortgages down to a value of zero on their books or close to it over a period of months, maybe even a year or two. This is the way it was explained to me a while back by a large bank, an officer at the large bank, was they had this bucket of non-accrual. Every quarter they could say, you know what, we can afford to lose 10% of that balance. We can write that off as some type of internal loss that they have. And when it reaches a certain point, they say, you know what, let's get these off our books. Let's show these to some investors and see what the highest price we can get for them. Well, I end up getting this list. The only time I'm out searching for these deals is when I'm searching for these banks. I find a bank, they send over 20 assets, I look at them, I put an offer in on them, I may win 10 of those. I don't have to go out and look for deals. The competition is very small once you get to a level that I'm at, where people actually bring me assets to look at. I've been doing this a long time. I've got quite a network around me. So there's never a problem of too many deals. Right now, there's a problem of, it's always the ebb and flow of cash versus deals. Right now I've got too many deals and not enough cash. And a lot of people, that are in this space have this issue. I know that in real estate, people are out going to these county auctions, and they're very competitive as far as their wholesale deals and their flipping deals. We don't really have that in no business. That's a huge thing. The next thing that's huge that I find in this business is the ability to do this business from anywhere. I literally have a cell phone and a laptop, and I'm in business. I've done this business from any location, wherever we travel, and that's a beautiful thing as well. You don't need to have a physical location. There's obviously no storefront. There's no real properties to go to. We buy these things nationwide. We're able to do the due diligence that we do on these assets way before we ever write a check. We can, and I know you're familiar with the process of buying notes. I can look at 20 assets and see that, hey, 14 of these things, I'm just not going to go near. I don't like the situation. I don't like the house. I don't like the neighborhood. I don't like the borrower. I don't like anything about it. I can just say, you know what, I'm going to pass on that one. So there's more due diligence can be done from your desktop than actually going out and physically looking, driving neighborhoods, looking at properties, looking for vacant homes. There's none of that. It's all done by using outside vendors, and I'm able to teach people how to do that, and do it successfully from pretty much any location.
Right. And so the type you were discussing mostly non-performing notes, right? So you have non-performing notes, and you also have performing notes, ones that, or I think they call sub-performing notes, I believe. It's been a while. It's been a while. So
Yeah.
is that right? The three different types: non-performing, the borrower has clearly fallen behind a certain amount of months in a foreclosure type scenario, depending on the state they're in. You have sub-performing, where they may have missed a couple payments, and they made a couple payments, that kind of thing. And then you have performing, which are just notes that have no missed payments. Is that correct? Those three categories, would you say?
Yeah, that's a nice way to put it, because most of the notes that we get from a bank are non-performing, and then we will go through and restructure, try to keep the borrower in the house, and say, listen, I see that your mortgage payment used to be $1,100 a month, and you get them on the phone. They're like, yeah, 1,100 is way too much. I say I can see that. What can you afford now? We'll look at their financials. We'll have a servicing company look at what they think they can afford to come up with, and we'll make a fair assessment to say, you know what, looks like about $625 a month is something that you can afford. They may agree, they may disagree. We'll come to a number that works for us. Sometimes they'll say, yeah, I can do $650 a month, and I say, you know what, let's just do this at $550 a month, because I've done some internal calculations of my own. $550 a month does work for me. I can lower their interest on the mortgage, which lowers that monthly payment down to make it something that works for them. And now the borrower starts making payments. Well, that loan has converted from a non-performance. I've converted it into a performing loan, and the only thing that's left to take care of now is the amount of arrears, which is the monthly payments that have been missed behind until we've gotten to this point of doing a workout now. There may be, $9,000 worth of missed payments, and we'll say, okay, so how are we going to handle these missed payments? They may come up with a check for $4,000 or $4,500 to say, you know what, let's just get rid of the arrears. I'll give you $4,000 right now. We say, four doesn't work, but six will work. Let's take the $6,000 and start making that $550 a month payment. Well, that mortgage has now been brought from non-performing, taking care of the arrears in some discounted form, and then moved into a performing status where now they're going to start making $550 a month, $550 a month, $550 a month. That to me is what we call a reperforming mortgage, and those are beautiful things. A sub-performing mortgage may be that, hey, we never took care of those arrears. They couldn't come up with any money. They just want to make payments until something else happens, and we'll go ahead and work with that person too, and start working and just accepting payments. That's a sub-performing, kind of a dog, but it's still a check that comes in, and a lot of times we can work with that.
Right. So I mean, if you bought it, especially at pennies on the dollar, and they still owe you that balance, you're just restructuring it so that you can collect monthly income and extend those payments over time to collect that full balance that was borrowed, owed to
Absolutely.
you.
Yeah.
Right. So one of the
You
biggest,
thinking about getting back into it, Brian, or what?
well, I've had my fair share. Well, it's interesting when I talked to Kevin, he explained it. He does quite a few notes as well. He's like, a third of ones that I buy are dog, a third are break even, and a third are the ones that are profitable. I could say that one of the ones that I picked up made us, actually two of them made us a couple of bucks. One of the ones I had to foreclose on, unfortunately, the heir had no interest in working with me. The borrower died. And actually, speaking of which, I had to go through the foreclosure, and I'm going tomorrow. This is actually a unit in West Palm Beach owned by my IRA. Do some last minute fixes because it's going to be rented out on the 17th.
Nice.
So for something like that, I mean, especially where it's located, I was pleasantly surprised, and I said, oh, okay, this one actually, I could see myself retiring there in 30 years. So we'll see. But yeah, I mean, then we have one in Arkansas in which, now this is something new. we hired an attorney, and he said that we had to come down in person to testify. And this is a really, really small purchase that we made, and it was in an area that is just not that great. So we never even went down. And I thought that was interesting that the attorney said, for whatever reason, this county or whatever it may be, you have to show up in person to testify. And I'm curious. I'm going, what am I going to testify? I bought a non-performing note from the bank. I'm testifying what? I can't swear to, yeah, I bought it from them. That's the extent of it. But apparently they wanted us to show up in person. I don't know if you've come across that a lot. This one's in Arkansas. Yeah, of course, I get the one off that that they require you. I mean, offline I could talk to you more in detail. Maybe there's some other possible options that we have. But at any rate, so I've had my it wasn't all gravy. I had a couple good ones, and this one not so good, and other ones that are kind of the break even. But I haven't. What I've noticed is that the lender that was giving me the notes, they don't have as much inventory right now. So it wasn't my primary line of work. I was first dabbling it with my IRA money, but yes, I mean it definitely sounds enticing.
Cool.
Well, one of the things that you mentioned that I'm sure people are going to say, how do you get these things at 30 to 40 cents on the dollar? Why would a bank sell these notes at 30 to 40 cents on the dollar?
I still ask myself that. I mean, I still pinch myself. I'm like, to buy that $100,000 mortgage for 35 grand, you still got to come up with 35, but there's such an amount of forgiveness, of cushion, of yikes, I screwed up and I'm going to make money.
Right.
That to me was good because, I intended on screwing up and it still happens. I'll make a bad assessment on value. I'll make a bad assessment of the actual borrower having the capacity to get back into a reperformance status. We miss our target and there's still room. I can take that $35,000 mortgage and sell it to someone that's local to the property that wants to maybe take the property over and do some type of rehab on it. I can sell that thing to them and still have a good exit and make 5 or 10 grand.
Right.
So there's a lot of leeway once you have the source for the product, and I luckily have that, so I'm very fortunate. But I'm very fortunate because I spent the last 2.5 years doing nothing but looking for this stuff.
Exactly.
It's not like I'm sitting around waiting for tapes to show up at my door. Because this is my line of business. I've pursued this business very aggressively, and I've got my bird dogs out there calling banks right now.
Right, exactly, and that's what I've done for probably 6 months at a clip, and it's interesting because you get the right person, or if you can get the right person on the phone, and you do find a lender that is actually selling the notes.
Mm-hmm.
I've had many times where they say, "Let me guess, you have access to millions and millions of dollars, and you want to buy all these pools," and I'll laugh on the phone because I'm like, "Yep, must have been a seminar in town, and they're all calling you up." So there is important things that you have to, certain lingo that you have to have. That exist in a note business somewhat, that shows that you're familiar. We'll dive into that in a little bit.
Yeah.
But what I was told as far as why the banks are going to sell these things at 30 or 40 cents on the dollar is because they're in the business, apparently I see differently with them rehabbing some houses they've taken back, but allegedly they're in the business of making loans. And if they have too many bad loans on their books, they're going to get penalized from, I guess, what the FDIC. And what they want to do is sell off those bad loans at a discount so that they can go ahead and get more mortgages.
And make new ones.
Correct.
New good ones, yeah.
So that's what I was explaining to me. And the reason why I say allegedly is because some of these REO properties that we see on the market, you find out that, wait a minute, Wells Fargo is actually fixing that house up. I thought they weren't in the rehab business, or the real estate business. I guess it's something new or some maybe just fluke, maybe certain areas, whatever it may be. But for all intents and purposes, the banks will sell these at a discount, and there's different ways in which they could do it. And again, we'll kind of jump into that a little bit shortly regarding one-offs and portfolios, etc.
Cool.
So the next thing would be, okay, I know what a note is. I know the different types of notes. Typically, I'm going to be looking for non-performing notes to buy them at a discount, because why would a bank sell a perfectly good performing note at a discount, or a large discount for that matter? So with that being said, where does one go to buy these notes?
Yeah. So what I've kind of set up is a trading platform where you come to my website, you give you access. It's totally for free, and we teach people how to do this business by walking them through a note that they purchase off of us. We then get on a webinar on Tuesday night, and let's say Ryan buys his first note. You fund, we close. I send you the file. You have all the files and everything. You get on the next Tuesday's call, and you're like, I'm like, now what? This is a crazy business. I don't know anything about this. So I walk you through on that Tuesday night call in front of the other 40 people that are on that call and say, okay, Ryan, the first thing you're going to do is record your assignment. The next thing you're going to do is get in touch with the servicing company. The third thing you're going to do is create an options letter for the borrower. You're going to walk you through all these things to do and give you an assignment for this next week period in between the webinars. And now you get on the following call next Tuesday night, and I say, okay, Ryan, how'd you make out? Well, I didn't do this. I'll yell at you right there. And you didn't do your homework. Or let's say you did do your homework, and now it's boarded at servicing company. You've got to walk you through the next process. Okay, so get in touch with the borrower, start foreclosure, get the attorney to do this, do that, and get the ball rolling so that the borrower knows that you're serious about this loan. Because you just dropped 40 grand on a $100,000 mortgage. You better get this thing to work. And I'll walk you through it. If it takes 6 months, it takes 6 months. If it takes 2 years, it takes 2 years. I'll walk you through the deal until you get the borrower to do something that works for you. We'll sit down and look at the numbers together. We'll look at the property. We'll figure out what the borrower actually can afford, all the steps that's necessary.
Right. So let me ask this. So you actually offer notes for purchase as well through you. What if somebody said, okay, they're looking to purchase directly from the bank as well, or maybe you have some notes that they want to go ahead and get you more notes as well, or whatever it may be. Where are they going to go to purchase notes as well from? It would be other companies like yourself, or how about direct to the lenders?
Yeah. So what I've done, like I said, for the last 2 or 3 years now, is I put a group together. We called it Note Quest. We were meeting on Tuesdays at 5 p.m. and these guys and girls were doing nothing but going out and finding me assets. I've gotten to the point now where I've done enough of those phone calls that I'm just like, I've had enough of that. So I've kind of stopped creating these bird dogs. There's a lot of people out there that don't have a lot of money to buy notes. They know that the note space is great.
Mm-hmm.
They just don't have a lot to, drop on these $40,000 purchases. But they want to get into the game, and they were doing it by finding the assets. So I don't really support that program anymore. I've got enough assets now. I mainly just want to deal with people that buy notes from me. And, there's some great programs out there. If someone does come across some tapes, occasionally I'll take a look. But it's got to be from a great source. It can't be some of this stuff that's floating around the internet.
Right, daisy chains and whatnot.
Yeah, oh man, I've spent years chasing my tail on that stuff.
I've been down that path. I could say after doing it for 6 months or a year, I recall being on a conference call, and I think there was 5 or 6 people on the line, and I've had and you ask them, are you direct to the source? Yes, I'm direct to the source. I'm direct to source. And literally there was 5 or 6 people on the line. Not one was the buyer, not one was the seller. So I through email, I said, I thought you were direct with so-and-so. Oh, yeah. I was direct with so-and-so who said they were direct. Nobody was in direct contact. And I said, right then, I will never deal with this daisy chain scenario again. So what I did was I actually started getting on the phone and calling these lenders.
Oh.
And you'll get shut down a lot of them, because they're getting a ton of calls, especially if they're having seminars in the area from maybe Kenny Rushing or something. And you call up and you're asking about their, non-performing. Do you sell non-performing notes? and obviously there's other lingo. I'll have to look at my scripts, whatever, what you use. But the reception will say, oh, no, 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 sorry, we don't do that. You have to know, kind of have to navigate through the hierarchy and the right things to say, especially if they're saying no, 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 and they try to shoot you down right from the get-go. To get to that person that is in charge, or that department that may have those non-performing assets for sale.
Right.
And then there's also some dialogue that I mentioned before that they use, such as tapes, such as one-offs, such as portfolios, etc. That you should be aware of to show that you're knowledgeable in this in the game. And I mean, do you want to go over maybe a little bit of that as far as like what a tape is, what a one-off is, and some of the other common language that these new note buyers should be aware of if they're talking to lenders or somebody else who's experienced.
Yeah. So my answer to this very popular question, I guess, if you're a note broker, you're going to be toast. Just like you were saying, it's daisy chains that are out there where nobody's a buyer, nobody's a seller, everybody's just yapping and yapping away. It's all BS, right? The way that anybody's going to make money with this business is to become a note investor. Now, I'm a note investor who has more deals right now than money. So I've got a lot of notes that are available to me. I don't have enough capital. But I'm still a note investor with extra notes. So I may call a guy up like you and it's like, hey, listen, Ryan, I got this great deal. I can buy this thing right now for 40 cents on the dollar. I think you should take a look at it. Boom, put the deal together because you know that I'm serious. You know that I'm a note investor first. When, let's say you wanted to get back into the note business full time. Well, the first thing you should do as a note investor is go to a RIA meeting and introduce yourself as Ryan, the note investor. And you may not know a whole lot about notes, but I bet you know more than the guy you're talking to. And become a note investor and don't introduce yourself as a note broker. You introduce yourself as a note investor.
Right.
You own 3 or 4 notes now. You like it. You want to get a little further into it. You start talking to people about note investing. Oh, I know this guy who says he's got a tape. Now it's your job to go and talk to this guy and talk to this tape. Talk to the owner of this tape to vet them out, to see if they are real or not. And now, because you're a note investor, you know the documentation. You know the name. You know what it takes to be a note investor. You know what collateral files are and allonges and assignments and all that stuff, because that's the stuff that you had to go through when you received your collateral file, right? You know what an allonge is now. It's a weirdest, crazy name. But you start learning the lingo when you start learning the business.
Right. So what are some basics? Like, for example, we're talking about a tape, and a tape would be considered basically, it could be an Excel sheet with a bunch of properties, like a portfolio. That's the tape.
Tape is a list.
Right.
A tape is. I think the word tape came out all the way back from the ticker tape, back in the 30s, when they were looking at stocks. That's always been what I kind of thought of in my mind. But, I'm working with a bank right now that I don't think they know how to make spreadsheets. They're sending me over PDFs on every one of these things. And now I have to populate, or one of my guys populates the PDF information into a spreadsheet so that I can look at this stuff to see if these are assets I want to bid on or not. So a tape is just a list.
Right.
It could be 20,000, and that's how they come. They come in as a spreadsheet, and so that's a tape. The mortgage itself is the document that attaches the debt to the house, and the note attaches the debt to the borrower.
Correct.
So there's 2 different terms there. And now if you go to a trust deed state, a mortgage is called a trust deed. It's not a mortgage. So.
Right. And you said it could be 20,000. And the reason being, sometimes people will call up a smaller lender or a bigger lender for that matter and say, hey, would you sell the note on XYZ Street, a particular property? And they may say, no, we don't sell one-offs, meaning we don't just sell one note at a time. We just sell large tapes, portfolios. In some cases, they're talking 100 million plus, easy. So that's where the term one-off comes from. And I know you mentioned an allonge. It's been a while since I've done an allonge. Maybe why don't you just kind of explain what an allonge is?
Yeah, an allonge is it's an endorsement to the note. So a note, if you picture a note, a note is an IOU. That's all it is. It's an IOU, and it's kind of like a note is, if you think of it as a check. Checks in the mail, checks in the mail. So a check needs an endorsement on the back for it to be valid, right? And it needs a signature at the bottom, and then you flip it over and you sign the back before you can cash that. Well, I know you're a landlord. I've been a landlord almost 20 years now. I have had tenants try to sign over their paycheck directly to me. And you actually can do that. He can sign the paycheck and give it to me. I can take it to the bank. And because it's been endorsed, they will honor that. Now, I can actually take that check and then sign it to someone else because it's traveled from the tenant to me. Then I want to give it to Ryan because I'm going to buy that fish tank that's behind you. And so you now have a check for $2,000, and you technically can go to the bank with that endorsed signed check and cash the check. If you think of a mortgage and a note traveling from Bank of America to Ocwen to my company to your company, there needs to be a paper trail. And I need to endorse my sale of the note to you by signing an allonge, an endorsement of that transfer of a note. So there's an allonge that's been signed when it went from Bank of America to Ocwen with an allonge. And then there's another allonge that it went from Ocwen to Note Conference. And then it went from Note Conference to Ryan. Well, there's a signature for each one of those officers that has transferred that document. That's all that is.
Excellent. Excellent. And I know previously you mentioned servicing company, and some people may say, they may have caught that, they may have not. Servicing company. So when you buy a note, servicing company does have a part in servicing that note.
Absolutely.
Do you want to just explain a little bit about what their purpose is? Is a servicing company necessary? Can you do it on your own? What are the responsibilities, their roles, charges, etc.?
Mm-hmm. Yeah, so when you do buy a mortgage or when you buy any type of debt, there are collection agencies that you can hire that will go and do the dirty work for you.
Let's see.
You can hire a servicing company. They are licensed in all 50 states, and they can go ahead and do the collection service.
So, okay, we're
Servicing.
correct.
Yeah, so with the servicing company, they are an outside vendor that I hire to do my collections for me. So if you think of yourself as a property rehabber, right? You buy the house, you find the house, you now hire a contracting company to come in and do your rehab for you. That's what I look at a servicing company as. They are almost like a property manager or contractor. They're the one that's going to go in and fix your bad note and make it a good note. Some people like to do that themselves, and some people like to hire that to another company. And you have that option. You can take care of some of the conversations that you have with a borrower using a type of servicing called client managed, where I'm the client. I manage the borrower and get the borrower to agree to make payments. I take that information, I send it over to my servicer, and I said, listen, my borrower said he's going to pay this. He's going to pay $10,000 by next Friday, and then you're going to start accepting payments of $600 a month. Servicer says, okay, let's draw up a document. Let's get that over to them, and let's wait for that first check of $10,000, whatever it is, and then they'll start collecting the payments, and that's it. And then you move on to the next one. Hopefully it's that easy and simple, and gives you the opportunity to go out and find more notes and kind of outsource that
Exactly.
money collection. And they do it legally. because they're licensed legally in the state of Nevada to collect that mortgage money in Las Vegas, Nevada, if that's where the note's located. So you want to make sure that your servicer is licensed in the state that you own this note, and you turn it over to them. They charge you between $25 and $100 per asset per month. And the more notes you have, the more you're going to be paying your servicer.
Right.
But they are an outsource. Now, I can tell you from experience that there are certain things that I teach on my note conference thing. It's borrower management, attorney management, and servicer management. Being the toughest one is probably servicer management. There's a lot of moving parts to owning notes correctly, I guess you could say, and making sure that the borrower is understanding the program that they're getting into, understanding that we're giving them a discount on their mortgage, all the different things that can go right or can go wrong using an outside vendor. Just like you're rehabbing a house. Ryan buys a house across the street, and you let your contractors go to town on that thing. You come back and it's purple, and the kitchen is in the bathroom, and the toilet is undersized and it's too close to the closet door, and you can't even open the closet door. I mean, think of all the moving parts, the things that can go wrong when you're rehabbing a house. I would say about half of that number can go wrong servicing a note. So you really need to, have somebody with experience guide you through the process, at least in the beginning, to say, yeah, okay, so what can get messed up here? Well, I didn't look at the financial statements to see that the borrower can't really afford that $700 a month, can really only afford $400 a month, and the servicer never caught it, and I never caught it. And you wonder, the borrower made 2 payments, and then he stops making payments because he couldn't afford it.
Right.
So we didn't do our homework correctly. These are the types of things that could actually happen.
Exactly. Right. It's a good explanation. In the beginning, obviously, we went into the different types of notes and the differences between note investing and investing in the actual house for rehab purposes, we'll say. Why don't we end off and just kind of go into some of the details as far as, the pros and cons of investing in notes?
Well, let's talk about some of the upside now. You, Ryan, you've got your 2 rentals on that one property. And now you have to have insurance to make sure that if something happens to those tenants, you're covered insurance-wise. The liability of note ownership is not as heavy as it is with real estate. You think of the bank when they're out writing the mortgages. The banks are like, you know what? I'd rather own the mortgage. We'll invest in real estate through the banking side, not through the ownership side. They'll leave that hard part to you. You're the owner of that property. Nobody calls the bank and says, hey, my furnace is broken.
Fix the roof.
Get over here and fix my roof.
Yeah.
But you as an owner will get those phone calls. Unfortunately, as a property owner, you don't have the same hands-off situation that the bank has when you're the bank owning a mortgage. You really, and I think everybody out there should just really sit down and say, now, what the heck is this guy talking about being the bank? What does it look like from sitting on the other side of the desk? That's the weird thing that took me a long time to get my head around, was like, wow, this is a really cool, very powerful position that I'm in. Being the bank, taking that role is a very powerful role, and you really need guys to sit down and really think about, is this viable? What's it like to sit on the other side of the bank desk and just receive the monthly payments and not be the property owner if you don't want to?
So okay, you're not getting calls at middle of the night fixing toilets. You don't have to fix a roof, a furnace. You're just collecting those monthly mortgage payments.
Yeah, a friend of mine's got a sign hanging up in his office. It says, "I'd rather collect a mortgage payment than a rent payment any day of the week." That's a true story. Now, the rentals that I do own, I like. They're local to me. They're properties. They're decent properties. They're not, ugly houses. The notes that I own are nationwide, and I couldn't tell you what the house looks like. I definitely couldn't tell you what the inside of the house looks like. And, it's a very comforting feeling to know that I have monthly payments come in, whether or not I'm in New Jersey or whether I'm even alive. It's the most passive income I've ever experienced, and I have been looking for a long time at other streams of income, and nothing compares to this for me.
Right.
It was, I'm 57. It was at the right time in my life where this business came along. I was a real boots on the ground, up on a ladder kind of guy, and then this came along, and I'm like, I like it. So
Yeah, it's a little more passive. I mean, some of the cons, some of the negative. Every investing strategy has pros and cons. One that I could see from the note business would be depending on where you buy that note, and depending on if you have to go through foreclosure. Let's say you bought a non-performing note, the borrower has no interest in working with you, or whatever it may be. If you have to go ahead and foreclose, I had to go through this one in Florida, which is very similar. It seems the laws and timelines as New Jersey. I think it took probably about 2 years, give or take, and that could be costly. That's probably another, I guess, con you could say for note investing. It is very capital intensive, especially not just for acquisition, but if you do have to foreclose, you have to hire those attorneys, etc. But again, if you're buying right, like you said, at 30, 40 cents on the dollar, you have that buffer room where you can make some of these mistakes. You can afford to pay, more money here and there, and still be at below, let's say, the 65 cents on the dollar that we're looking for rehabs for.
absolutely.
So
Yeah, that is kind of a downside. And taking possession of a property in 5 states over or 10 states over is not the most comfortable place to be. You're right. You're taking possession. There's possibility of vandalism and all that stuff. So that to me is more of a downside than anything. Is exactly what you stated. The attorney fees are not that bad. Even I've got a foreclosure in Florida. You're probably in for about $7,000 or $8,000 on that.
hmm I was around 5 or 6, I think.
Yeah, I mean the max is 7, 8. It's not the end of the world. Let's face it. You are taking possession of a house. You will come across a couple of borrowers here and there that they don't think they don't think they can work with me, and for whatever reason, maybe they just really can't afford to live in that house. And it's unfortunate, but it does happen.
Right. And that's when I purchased the notes. My intention was to make it performing. It's
Mm-hmm.
unfortunate that the previous bank, I guess, or at least in the heirs' opinion, was really bad to their father, and kind of you could tell the tension when I was talking to them on the phone, of saying, hey, listen, I'm easier to work with, and they really didn't have any interest. I guess they felt they were really done wrong, and the father passed away. And at any rate, I had to go through the foreclosure process. But even with having to do all that and hold it for a full year, because actually this note was for a condo, which they say you can't rent it out until you own it for a full year. You have to pay those HOA fees, you got to pay the taxes, and even so, even after all that and extra fees, it still makes sense as an investment. So
Cool.
if you have the knowledge, you have I guess we'll say the time, because a lot of these don't happen, very, very quickly,
Mm-hmm.
especially if you go through the foreclosure process. It is definitely a lucrative avenue. Um, Mike, I appreciate all the time and the information you shared. You did mention that you run noteconference.com and you hold free webinars. Can you tell our listeners information on that? What days that they can attend, and how they can probably get in touch with you, and anything else that you're offering, or
Yeah, cool.
ways for them to network with you.
Well, yeah, I mean, I really appreciate you getting me on here, Ryan. It's been a pleasure getting a chance to catch up. I know that we got to spend some beach time down here this summer and
Absolutely.
hang
What?
out. Yeah, so Note Conference, NOTE conference.com. There are previous recordings of the webinars that we've done. I started this February 23rd. It's a brand new program. I think we only have about maybe 10 or so recordings done so far, 10 or 11. And it's every Tuesday night at 8 p.m. Eastern. Jump on the live webinar. You can go to the website and register to receive the invite for the go to webinar, and then jump on the call and just check it out. You can just sit in the background and kind of lurk around, or you can be one of the people that are going nuts buying notes and dealing with us.
Right. So they could buy notes from you, and it's you know, you walk them through the process, and it's just kind of like a general discussion each week as far as like learning and educating them and networking with them and stuff.
Yeah. So they buy a note off of us. They start asking me questions, my partner questions, and we will go through and get them fixed and working on that deal. And they'll get to hear everybody else's deals. So there may be 9 people on there with 14 notes, and I'll walk each one of them through their specific issue that they're having with that note. That way they get to hear 14 different topics.
Right.
You know, yours might be in bankruptcy, and his might be in foreclosure, and his might be in performance. You get to hear, wow, I just heard 14 different deals go down in one evening, and it's been great.
Absolutely. And being somebody that's invested in notes, that's a very, very valuable resource to hear what is actually going on behind the scenes in those types of scenarios, I can tell you. So
yeah, I used to charge 15 grand for the education, but now I'm dealing with one person, and I'm saying this over and over and over. I'm like, you know what? Let's just make this thing for free, mark up the notes, make my money that way, and I only have to talk now on Tuesday night instead of every day. I was giving everybody unlimited phone support. It was literally killing me.
It could be taxing. Well, that's a great resource, and I'd like to attend some of those. Well, I'll have to fit it in my busy schedule. Mike, thanks a lot for being on, and I look forward to having you on again.
Thank you. Have a great one.
You too.
Cheers.